Semiconductor giant Intel hosting its annual meeting tomorrow, a week after posting better than expected first quarter results. Our next guest is expecting a strong second quarter from Intel, but recently went underweight on the chip sector overall, warning the second half growth could be much slower than the street expects. Joining us is Apjit Walia. He is semiconductor analyst at RBC Capital Markets. Good morning. Good to see you.
Thank you.
As my guest host David just pointed out, so far this morning, you're one for one. Why are you negative overall on the chip sector?
Well, we went negative in semis in early 2004. We went bearish because there's three reasons which semi cycles are caused last 30 years. One is a killer application. Second is major global fiscal and monetary stimuli. And third is major supply cuts. At this point, we have none of the three going on. In fact, we have the opposite. We have no killer app, which is something like the internet of PCs out there, which is driving growth. Stimuli is going the other way. In fact, we're raising rates globally. And there's no major supply cuts. In the absence of three of these, it's very hard to see a sustainable semi-cycle out there. And I think going forward, when we saw an earlier fall, we went underweight, it was primarily driven by inventories. Inventories are rising sharply, and the supply was rising, so we were nervous. And now we essentially changed our stance in late September to be a little bullish for a Q4 rally. But since early January, we've been incrementally going more defensive. Apart from Intel and a couple of other names, I've been picking up weakness in the food chain, primarily coming from Asia.
What sets Intel apart?
I think Intel this quarter is pretty solid. I think this quarter we got a pretty good numbers. I think I've been a street high on Intel for like 6 months, since October, and been picking up record numbers for them. And I think, for this quarter, I'm at 9.3 billion. I mean, about almost $500 million above the street. And I think this quarter looks pretty good. I think going forward, the second half, my numbers are much below the street. I think we're going to run into some trouble if end demand doesn't come up. And I believe end demand is going to slow down incrementally as we head into the third quarter.
Based on a potential mid-cycle business slowdown, can you see the group in any scenario outperforming the S&P 500 for the next year?
Yeah, I mean, I think what you got to really look at is global stimuli and global end demand. At this point, if I really put it this way, you got supply, which is, I would say in a bullish cycle, because equipment bookings is declining, inventories are low, sentiment is pretty bearish. So you've got several things set up. But the point is, demand is slowing down, and if demand slows down further and further, no matter how much you cut supply, you're not going to get the jump. But if demand comes back, and all these issues with the Fed and global tightening and inflation, and a lot of the issues we have go away, and demand comes back even a little bit, it could set us up for a pretty decent rally.
How about the commodity guys, the commodity chip makers and pricing declines? Is it as bad as it was at the beginning of the year or the end of last year?
I think the ones you really got to concern about, and which really concerned me, was if you look at some of the high-end guys like Linear Technologies, which reported recently at Max, we reported last time, which missed numbers. I mean, they're not seeing the robust trend. And if the guys who really can command pricing are seeing issues, that really worries me about the semiconductor industry right now.
Yesterday we had a negative call about a casino because of what they said were Taiwan tensions with China. I don't know how to read this with all the big chip makers and foundries over there. Do you watch that? You have to watch that?
Yes, I think there's two things I've noticed in semis which people haven't picked up much. One is you got to watch North Korea for DRAM. When North Korea is doing a lot of nuclear testing, you got to worry about DRAM, because that's taking 40% of DRAM supply out of whack. It's like saying when there's Middle East tension, oil price goes up.
Yeah.
When I see North Korean tensions,
Back up North Korea.
because South Korea is
Right next door.
40% of DRAM supply, Samsung and Hynix.
So you just have to worry about it, you're saying,
Yeah,
ultimately.
that worries me about DRAM supply, and that's why I think some DRAM, prices can actually go up from that. And same with Taiwan. If you start affecting Taiwan, you're taking out a major global semiconductor capacity. You're taking TSM and UMC, the biggest foundries, out of commission. So yeah, that could worry us about supply in the sector.
We're almost out of time. What are the most important issues that you think Intel needs to address at this meeting?
The first and foremost is, of course, the change of guard. They talk about Paul taking over. He's a marketing guy. He's done really well with Centrino, and I think he's got to talk more about that. The company started to go out there and market aggressively. The second, I think, is margins. The most important thing, every investor wants to know, can they meet that 59% gross margin target? And they got to talk about that. And the last, of course, is the ever-perennial issue of Intel. They're a desktop play. Can they move to communications? Can they make this WiMAX? Can they make this big communication jump and make that to be the future driver? People talk about them buying Qualcomm or TI, Marvell, Broadcom, companies out there which are strong communication companies, which are growing. They've got a lot of capacity. They got to marry the two, and I think they got to have a coherent strategy and communicate it to investors clearly going forward.
In a group you're cautious on, besides Intel, what do you like?
Well, I think of the two names which essentially I'm recommending, one is, of course, Intel, because they're having a decent quarter, and the other one's Linear, and that's primarily because it's a defensive play. It's, almost like cash for semis.
But not Maxim, which is the other high-quality play.
I'm not saying Maxim's a bad name. I mean, if I was someone to put a gun to my head, I would say High Analog is still a safe place to be, because that's what money flies to whenever there's a downturn. That's the names to outperform. But at this point, if you could avoid semis, I would.
In terms of their product mix, though, CPUs are what? 85% of the business?
It's a PC
I mean,
play.
there's no way they're going to be able to diversify out of that, is there?
Well, they can do it by buying companies. They can,
They haven't typically done that, though, have they?
Well, they bought smaller companies, but
Smaller, but they haven't made the big deal that you were talking about just now,
the
namely
sector is
Broadcom
becoming
or Qualcomm.
mature. It's becoming cyclical. It's time for a major consolidation. It's time for Intel goes and buys big companies. That's what happened in other sectors. Why shouldn't it happen in semis?
All right, thank you. Appreciate it. Apjit Walia, semiconductor analyst at RBC Capital Markets.